How's it going, guys? It's VisualTrades. Reminder, nothing I say or do is financial advice. Simply giving my perspectives on what I see for the foreseeable future with this stock. Today we closed at 38.89, which is negative 0.69% down from our close from yesterday. And we also had a post-market of negative 0.08. I just wanted to wish you guys a happy Thanksgiving, as I won't be able to do a video tomorrow because I don't feel like it on Thanksgiving. But for the most part, this will be one of my more exciting videos in terms of a complete guide to for what I feel is what I'm going to expect at the end of the year for AMC. And it's a lot to cover, but I wrote it down so that way everything is pretty concise, and I feel like this will be one of the better videos for anybody who is having any doubts or unsure. Here's the thing: I know there's a lot of hoopla in the community that gets tossed around where, you know, people throw around these ideas, but there's never really a why to them. This is why I love technical analysis, because you're only analyzing the data that's presented to you, and you can determine price action based off of what you see in terms of technical breakouts, volume, distribution. You have things and indicators such as the RSI, the MACD, the STOCH, you know, different things like that to assist you, whether you're day trading, swing trading, or you're just simply holding. I really do appreciate all the support, and let's get into the TA. So again, there is a bearish continuation micro right now, but in the macro sense, we are bullish. Actually, we have been in a bullish trend since September 20th, right? I wanted to show you guys something real quick though. So here we go. So you notice how this fractal that's playing out currently, we created a dip down that was testing a retracement level from back here that was encapsulating this move, which was around the 0.714 level. The reason why I calculated that is because me and Jen Collada, we had figured out that the 0.014 was a fib level that they were attacking, that couldn't be seen to the eyes of the general populace when you do a regular fib retracement. And it's been keeping its validity ever since we made these retracements, so I kept it around. However, I do believe that there is further retracement that needs to be done before we see kind of a liftoff. I hope you guys are familiar with what a double bottom is. It's basically it's a bullish reversal trend where basically you test it similar to the same fib levels, respective of a support that was established way back when. And once you bounce off of it and you confirm with volume that you're ready to add to the next leg up, usually there's a neckline that's associated with the double bottom that's, you know, pretty much present at the top where you saw your peaks. And once you confirm out of that, then you're on to your next leg of resistances. So I wanted to date back to October 22nd, where we saw a similar retracement down. I don't know if you guys can see the similarities within this fractal. Sorry. Actually, yeah. Is it right here? I want to make sure I got this right. Hold on. Give me 1 second. Oh, okay. Here we go. So this move right here. Hold on. I did this wrong. It's like this. This is better. Okay. There we go. So this move right here is what I've been looking at. As you can see, it creates the same U shape, descending down past that crucial 0.786 retracement level, showing no signs of strength and bottoming out around this 1.618 retracement. So I expect kind of the same scenario to happen here. However, the problem with this is that AMC tends to like to retest the levels over at the macro trend line that we have going on with the symmetrical triangle. So I would not be surprised if we were to go down to 36.50 to 37 at the lowest. But me personally, I have limits that are set over at 37.25. I also have a limit set over at a little bit below 37, so like 36.90 just in case. And then ultimately, I do have a limit set at 36.50 just in case we do stoop that low. And from there, we would be confirming a bounce off of this trend line, and we would actually essentially be making a higher low based off of what we've seen from October, and then dating all the way back to August as well. Hopefully that loads. That's not August, sorry. There we go. So dating back to August. So yeah, it's actually a similar setup to this. I don't know if you guys could see that, but that retracement actually hit perfectly. Or if we were to hit this retracement perfectly, we would actually be retracing down to that that crucial between the 0.786 and the 0.884 levels that I was talking about earlier. Actually, hold on. I think I wrote that wrong. I think that's supposed to be. Hold on. I think this is supposed to be 886. Yeah, this is definitely supposed to be 886. I'm sorry, guys. Let me go ahead and fix that for you. There we go. I don't know why I got that wrong. But yeah, somewhere in between this little area is where I'm expecting a load up. So anything for me, anything above these lines right here is good for me. And the reason why I started the box right there is because initially off of this retrace, I don't know what it was with this one. I fucking forgot what the hell I did this morning. See, that's the thing. Like, I was moving around a lot of fib retracements, but my order got filled precisely based off of an extension level, and I think, hold on, I want to say that I drew it right here. Let me see real quick. It was somewhere right here. I think I took an order at 37.75, and then it wicked back up. So I kind of used this extension to my advantage. I was like, okay, well, if it were to revisit that extension again at the lowest, I wouldn't be surprised to see 36.51 or a little bit higher than that, because it coincides with touching the bottom of this symmetrical trend line. Okay, cool. So now that we got that out the way, I also wanted to talk about a couple of things. Talked about that. I also wanted to learn Elliott Wave. I was just gonna shout out Dazed off of the Discord. So let me go ahead and move to this chart right here. So when I'm taking a day trade, usually when I'm looking for determination of strength, I look for micro bearish outlook on the micro time frames to see where the continuation of the trend is lying, and to see if there's any reversals on different time frames. So what I've been noticing on some of the micro time frames for AMC, Lord have mercy, that is small. That you know, in the presence of this, like, you know, you have your 1 minute, you have your 5 minute, you have your 15. In a lot of these, you are trending a little bit bearish, even though the 15 kind of looks like a reversal, but to me, it's kind of setting up to look like a double bottom soon, because you had multiple tests of this upper resistance, and we might descend down into the last touch of this Bollinger Band, which wouldn't surprise me at all. So when I'm looking to take a trade, usually I look for a candle that closes outside of the Bollinger Bands and further continues up until I could probably potentially exit at this moving average or a little bit above, depending on how the indicators assist me with that. But the one I wanted to really look at were two of them. One was the 4 hour. The 4 hour actually started to show a little bit of expansion of the Bollinger Bands, which basically means that, actually I don't want to get this wrong, but I'm pretty sure it has something to do with the amount of volume allotted in a certain period of time. Sorry, you know, I hate making sure that, like, the things I say to you guys are backed by actual facts. You know, I write notes for all this shit. So what I would be expecting is further continuation downward based off of what I'm seeing in terms of the RSI. We are making a bearish trend and also with the Stoke, we are technically oversold, but remember, we are in a macro bullish channel. So because of that, we are under the moving average. I would not be surprised if we were to test the lower limits of this Bollinger Band once again come tomorrow, and see a reversal snapback for the last 4 hours of trading. I mean, not tomorrow, Friday. On Friday. So the first 4 hours I would be bearish and I would be looking to load up, and then the last 4 hours on Friday, I would be looking to hold my position into the next Monday, hoping for a gap up. Which brings me to my next point on the daily chart. The daily is actually hovering around the moving average, which is solid for us, along with multiple indicators indicating that we are comfortable around the upper regions of these Bollinger Bands. Finally, because we would have times where we would test upper regions, and we would confirm that we weren't comfortable around this moving average based off of the MACD and the signal line hovering below the zero, which usually means that longs aren't ready in terms of the demand that they want to push for a stock to be comfortable at higher prices. We also had the stock. I always get the name wrong. The Stoch. I'm just call it the Stoch. Fuck it. Freak it. Sorry. That was pretty oversold at some of these levels, which told us that further continuation above the moving averages, if we were to see oversold levels above these moving averages, then we would potentially be talking about a technical breakout, because it's all relative to the channel that you are currently in. You cannot trade with just one indicator and pray to God that things come to fruition in the way you would want them to. You know what I mean? Like it just does not work that way. You need to have that coincided with back testing, fib levels for me, which is one of my favorite things to do, and this is why I can't wait to get into Elliott wave. And then also with the indicators, they work together. You know what I mean? Usually, sometimes you'll have the RSI indicating the direction, the Stoch indicating the confirmation on a reversal, and then MACD indicating the confirmation on the momentum. So that's how I use them in conjunction in that order. So I would be looking for a reversal come Friday, just based off of this price action. I would see a dip. However, that dip will create a bullish engulfing for us if we were to close above. If we were to close above 39.20, which I think is possible. I really do think it's possible. If we don't create a bullish engulfing on Friday, then you would just be talking about a bunch of sideways action for me personally, unless there was more indication that we would be going at lower levels. So right now I am betting on a bullish engulfing candle forming at the bottom of this potential reversal, especially with this sort of reversal candle going on. You had this long wick showing the amount of buying pressure that came in towards intraday. So yeah, that's where I stand on the daily chart. Let me go ahead and get into other things that I wanted to show you guys. So based off of like a 4-hour potential reversal, I will look to be loading up on March calls very soon. We are still in a bullish channel, so anything above 35 would still technically be counted as a higher low, which does not bother me at all. Please God, just keep bringing them premiums down for me. You know what I mean? Like I'll get in as cheap as possible if it means just being patient, because I don't want to touch the options until I know that we're super close to a technical breakout, so that way I could jump in, know that something is coming based off of the compression, and sort of get my kicks from that. Because right now I'm just day trading shares. I'm doing pretty good. So I'm about maybe, I don't know, hitting like 1 to 3% a day based off of my total net account value. So it's not bad. Daily, I already explained that. So I also wanted to show you this take profit that I was working on. I think I showed you guys this before, but more so to showcase the symmetrical triangle that we're in. I think I need to rework this retracement because I feel like I did it wrong in a lot of ways. For one, this is just god awful retracement. Like I want to, like I'm torn because I want to put it up here, which would make less sense in terms of like this being a symmetrical triangle, because we'll work on it. We'll work on it. It's not too far off, but it's this respects the fib levels a little bit more, in my opinion, which is weird to say. I mean, well, that's up for debate, man. Yeah, that's up for debate. No, the reason why I was playing it like that is because that's how I was able to get the top for our all-time high that we saw in the after hours, based off of retracement off the 0.61 that I took off of this move down here. So because of that, I basically kind of wanted to just show you guys the fractal more so. Again, still working on. That's why I say don't take anything I say as like the holy grail, because I'm learning just like you guys. Like don't take my fucking word, please. My word. I'm trying not to curse. I'm sorry. So the fractal that I noticed was that every time we broke down into a bullish outlook, we broke out into a bullish outlook, we would test the upper trend, slowly break down to test back into our bullish trend line, up until we broke below the higher lows and we started forming lower highs. And then once the lower highs got done, we bounced off of the bottom of this symmetrical triangle that we're currently in. And then I know the fib levels don't have to match up with the symmetrical triangle, but I was just saying it would be nice. And then after we broke back up, I believe this was kind of like the start of a new fractal. I mean, you can even tell I have this charted out with a fib retracement right here and a fib retracement right here, and these peaks respect the same level of fib. So nothing surprising there. However, the bullish outlook for this is the fact that our breakout here was a little bit stronger than the one we saw on October 19th, and this is dead center the exact same fractal. I mean, you even had a secondary test that we didn't see right here because there wasn't enough strength on the bull side to be able to even test that, which is why I'm kind of torn between whether or not we would see 37 to begin with. But you know, again, anything is possible with this stock, and what history tells us is that it likes to test this bottom trend. Let me go ahead and fix this real quick. It's a little off. There we go. So just like that, right? And what do you know? You know, the end of the symmetrical triangle ends on the same day those December 17th expire, which brought me to my theory as to like, you know, them collecting premium off writing the December 17th calls in general, letting them expire worthless, and then letting the run up happen, or not expire worthless, but a chance that theta is just gonna kick your ass on the way up. So, you know, this was in conjunction with a lot of the theories that we were seeing with rollover dates. A lot of people were saying 2 weeks before December 9th we saw significant run-ups, and I think the 2 weeks kind of starts next week. Yeah, somewhere around next week, maybe Friday, usually, which makes sense to see the run-up if the rollover date theory was true. But nonetheless, you know, just sticking to straight technicals. I don't really usually like the theories. I mean, you're seeing it for yourself that, you know, I had this vertical line drawn here as December 15th being the end of this symmetrical triangle based off of the trends that I drew. And I feel like a technical breakout of this would be pretty violent, just based off of the fact that we've quadruple tested this upper range like so many times. And you know, with us consolidating within this comfortable level, anything above this point, this is supposed to say 0.618. Again, I'm sorry guys, I know some of you guys are cringing at the way I drew my fib right here. I would fix it for you guys, but I just don't care enough to fix it right now. But this is, as long as we're consolidating within this region right here, it's still bullish price action. You're still, this is technically supposed to be your fib. Let me just show you, because I don't want you guys to be confused over the way I drew my fib. I just found it a little bit helpful that I reversed it. I don't know why. I'm just weird like that. I don't like the way the numbers are orientated, how they go up as, like, it's weird. Oops. See, I drew it from top to bottom again. There we go. Alright. Something like that. So as you can see, we're pretty much consolidating above this 0.618 now. This golden fib pocket, which, oh my god, that is incredibly bullish. I didn't even think of that. So in terms of the symmetrical triangle, the bulls are in the favor right now. Now the only way that I would see that we lose this battle if we broke below 35 headed into December, which is where I think the final battle would take place, which brings me to my dates. Tomorrow is the start of the range in which I believe I've been preaching for the last 3 months that we could see potential violent upside, hopefully. This is on the daily chart, and just a lot of it is built on hope, but a lot of it is built on the amount of work the community has put in, and a lot of the taxes that the government wants, which brings me to my last reasonings as to why I believe the squeeze is going to happen this year. My personal opinion on it, not anybody else's. Don't try to be like, oh, Makai said this, he said this, and then it didn't happen, so now I'm right below my man or woman. Financial advice is not here. I'm just simply showing you the TA that I created. So one is the wash sale rule. So wash sale basically means that let's say you're at let's say you're at a loss in a position, and you want to write it off on your taxes as something that either you could roll. There's a grace period. I mean, there's a grace amount that you can roll over between year after year, depending on the severity of the loss. I think it's like somewhere around $3,000 per year. So like if you were to lose like $11,000 on a trade or something like that, I think like you could split that up amongst the next 3 tax years. It's crazy. I forgot how the rule worked, but the wash sale rule in itself basically states like, when you liquidate a position at a capital loss, right? You cannot reopen that same position within the next 30 trading days or the next 30 calendar days. I believe it's calendar days. Otherwise, the benefit of that capital loss is exempt on your taxes. Especially at the end of the year where a lot of people like to close out their positions before December. To get ready for the holidays, just all sorts of stuff. And then usually people buy back into those positions after the year's end, which is usually why sometimes you'll see December to January run-ups. And a lot of people like to play options during the holidays because I think it has something to do with decay not affecting your options or something like that around the holidays. I'm not sure. I still have to look into that. But anyways, because of that wash sale rule, any liquidation of a loss on AMC would invalidate the tax benefits past December 1st, I believe. If you were to try to write off, or if you were to try to classify it as a capital loss in terms of utilizing the tax benefits, so the carryover won't happen, and it will just, I forgot the way they deter that, but that's one of the reasons. It's just another form of shaking out, and probably because they probably know the conviction is that the squeeze will happen this year. Another one is ripping closest to the cheapest value for the options possible. When I drew this time zone, it was purely by luck alone that the bracket, the 13 to the 21, ended around December 17th, which I would not be surprised if literally the day after or something we were to do a technical breakout, just because of how manipulated the stock market is. you know, you're collecting premium for writing those calls, for selling those calls, and you know, them expiring worthless. Whoever wrote them is making a big bag. Also, the Fibonacci time zones in relation to the last run-up are helping out tremendously with potentially seeing the direction of this stock. And you know, there is a chance that maybe I drew it wrong, but you know, it's just one of those things where you kind of just keep pushing up until you see the breakout that you want. But we still are leaning super heavy on macro bullish activity. We are at the near end of our symmetrical triangle. This isn't drawn to scale. This is on the daily chart. Usually I use the 45 minutes because you can see the precise peaks and dips along with the wicks. Also, the government's ability to capitalize on our gains. Let's be real here. I've preached this maybe 3 or 4 times. I'm pretty sure the IRS knows about this play. I just find it baffling if they didn't. I mean, you know, you even had the Fed come out and say that this was a detriment to the integrity of the stock market as a whole, just because of the dangers that insinuates from having this much buying pressure. And if the Feds are recognizing it, then I damn sure know, you know, IRS has word of how many holders at least, you know. If they let this rip, man, they would be collecting so much money off of us, man. Also, this is kind of an underrated one, but I think the debt ceiling decision is this mid-December. Got pushed back from October. Last time I recall, what the hell? Last time I recall it got pushed back, and you know, knowing the state of our government, I would not expect nothing more than a kick of the can. I mean, you see can kicking in this, you know, the chart that we're no emotions involved, but I feel like the comfortability surrounding that decision, if they were to kick the can, would create massive amounts of buying pressure, especially people that want to move their funds into assets, liquid assets, in terms of a way to fight transitory inflation. So yeah, that's pretty much the summary of everything that I have. To me, this is my top 3 AMC videos, so you know, come mess with the kid. Appreciate you guys for all supporting. We're almost at 200 subscribers. And shout out the experienced traders in the chat for helping me out with a lot of this conviction. Don't want to lose sight of you guys, and I'm highly appreciative of all the resources that you guys have been giving to the community. We're a very underrated group of individuals, and you know, we will all get our shine in one way or another, not in terms of other people's validation, but just in our portfolios. There you go. So appreciate you guys. This was not financial advice, and have a good night and Thanksgiving. Thank you.